Our next guest says that 2015 was one of the best years in the company's history. Mark Bristow joins me here at the BMO Metals and Mining Conference. He's the CEO of Randgold Resources, which has operations in Mali, Côte d'Ivoire, DRC. Mark, thank you so much for joining us here today.
Morning, Daniela.
So let's get an overview here. You know, you have a growing cash, no impairments, you're profitable. 2015 was a good year. What have you done differently than the other miners here?
No, I think if you go back 20 years, and something I always say is what you do today is not a product of what you've done that same day, and what happened in 2015 is a product of what we set out to do a few years before that. And you'll recall here talking about 1.2 million ounces in 2011 in 5 years' time. We set that goal. And I think we've always sort of focused on our goals rather than on trying to comply with the whims of the market.
But you also have a model, I know we spoke about this before, that should gold fall to $800, you would still be in a comfortable position. Is that still same game here?
Well, I'm not sure about comfortable, but we'd be able to survive. You know, we look to make 20% at $1,000, so our break even is on a cash flow basis is just under $800 right now as we speak.
Let's talk about 2016. I saw in your latest statement that you will allocate more to exploration. I saw that you also abandoned a joint venture with Anglo Gold. So what are you looking to do in 2016 here?
You know, Daniela, my view is that the market, the gold industry, has been feeding on itself for so long through M&A, and it really hasn't invested in its own future. And so what we've seen, if you look at the reserve base, and now the reserve base is coming off as companies restate their reserves. And the grade of those reserves is a great graph I'm going to show today on number of ounces per share. And if you look at the industry as a whole, gold industry, the number of ounces per share has halved in the last 10 years. And Randgold's ounces per share has doubled. And that's the fundamental value of any gold company, is what is your share backed by. And so our focus is, and I don't believe that the gold industry can get out of its current position without exploring its way out.
So are you aggressively looking?
Absolutely. You know, we've as you know, expanded our footprint by doing joint venture earn-ins with all the explorers of the northeastern part of the DRC. We've done 3 JVs in that area, and we're using this time to consolidate our footprint while everyone else focuses on survival. And I've always been one of the fundamental sort of differences is we invest in the troughs. That's the time to invest so that you can make money in the peaks, and not vice versa.
So on that note, we've had a nice rally here in gold since the start of the year. We've come down a bit from the momentum, but it's still higher. Do you think this time this rally has legs? I know we had the same conversation 1 year ago when gold was even higher than where we are today. What are your thoughts on the current gold price environment?
Our strategy is just going to trade between 1,000 and 1,400. It's really a solid market as far as demand goes. We're still oversupplying that. I don't believe this is a big bull run. I think it's representing the current global economy and the demand side of the equation. And I think if the industry stopped producing unprofitable gold, that'll push it up higher. But it's not going anywhere in a hurry. Just the same, it doesn't appear the downward sort of risk is really gone away for a while, I think.
Okay, well, how about gold stocks? They're in a better position this year compared to last year. Do you think the environment here is healthier?
No, I don't believe so. I think the current gold price doesn't help the industry out of its sort of fundamental problem, and that is it's broken and it needs to reinvent itself. And we can write off all the equity and we can sell assets to survive, but just on the same equation I was talking about, if you're writing down, impairing, and you're selling out assets and keeping the same number of shares, you're destroying value on a per share basis. And so that's where the industry is at the moment, trying to recover itself at a time when it should be investing in its own future, very similar to 1999.
Finally, Mark, I often ask CEOs to, name me a model that they look up to, and Randgold Resources often comes up. I now ask you, do you look to some businesses that you admire or say, yeah, I think they're doing it right?
Yeah, I think I'm often said, if you look at the early years in the 80s of Barrick, that's how when I started out 20 years ago, that's what I admire that business model. And it's about, our job is in managing national assets, which is what we do, is to change those into value, to convert that into value for the benefit not only of our shareholders, but the other stakeholders, because it's a national asset. And it's something the industry doesn't get right most of the time. And we really try and get that part right. And then the rest is easy.
Mark, continued success. Best of luck in 2016. Thank you so much for being with us.
Thank you, Daniela.
And thank you for watching our coverage here from the BMO Metals and Mining Conference. We'll have more for you in the next few days, so be sure to stay tuned to Kitco.com. Thanks for watching.